If you clicked on this video, you're probably pretty worked up. You've spent the last years working hard and living frugally to save up for a down payment to buy your first home. You found yourself a realtor and started going house shopping. You fell in love with a particular home. It was just the right size, in a good location, and you figured you could maybe find a way to stretch your budget just enough to make it work. So you put in the full price offer on your dream home and anxiously wait a few days to see if you got the house. When your realtor finally calls, you can sense it by her tone. It's not good news. You didn't get the house. It was actually sold to a Wall Street private equity firm that bid $20,000 over the asking price, paid all cash, and didn't even go to see the house in person. You start to question whether your 5% down payment and pre-qualification letter from Better Mortgage is gonna cut it in this market, especially when you're competing with companies that have billions of dollars. So you think, screw it, I guess I'll be a renter forever. Well, if that is you, first of all, I'm sorry for your troubles. I went through the same thing last year when I was trying to buy my first home in Dallas, Texas. Luckily, it all worked out in the end. But I gotta say, I also felt discouraged during the home buying process. So anyways, in this video, I'm going to examine this whole Wall Street home buying spree issue. And I'll be focusing on the cold hard data to assess how big of a problem, if any, this really is for US home buyers. Focusing on the data is really important here, because if you've already heard about how Wall Street is buying up single family homes before this video, it was probably from a really misleading business news article or a video like this one.
Holy smokes everyone, in this video, we're going to be going over how BlackRock and Wall Street and all the hedge funds are coming for your home and the Fed is helping them. If we don't act now, if we don't share this information now, by the year 2030, we'll all own nothing and the global elites will be happy.
I mean, I really do hope that guy actually is crazy, because I really hope the global elite isn't coming for all my stuff. Also, in preparation for this video, I was able to talk in great length with, let's just say, a very mysterious insider source. A person that currently works in the industry and is buying up single-family homes for one of the largest Wall Street single-family home investors in the country. He was able to give me a really unique insight on what actually is happening here. So if you want to find out who this mysterious insider is and what he has to say, then make sure you watch the video all the way to the end, because I know you're gonna find this really interesting. But first, I want to give a little backstory on how this all got started. Why did Wall Street start buying up single-family homes in the first place? And why are they now starting to buy up homes more rapidly than ever before? Well, it all started back in 2010, at the peak of the housing crisis, which saw hundreds of thousands of families lose their homes. Empty foreclosed homes could be found on practically every street, dragging down property values. The government was worried that unless they intervene, the housing market would continue in its freefall. Prices would keep dropping for existing homeowners, and the economy would be at even greater risk. But the problem was, who would fill these empty homes? The vast majority of Americans were really affected by the Great Recession and weren't in a financial position to be making home purchases. Also, lending standards were very tight, making it more difficult to qualify for a mortgage. So that's when the government stepped in and provided Wall Street with incentives to buy single-family homes. In early 2012, it launched a program that allowed private investors to easily purchase foreclosed homes from the government agency Fannie Mae. These new investor owners would then rent out the homes, creating more housing in areas that had high amounts of foreclosures. Many other large investors caught on and started to see the massive potential of high returns from buying single-family homes at bottomed-out prices. I was able to find this CNBC article from 2012 that is really interesting. Warren Buffett is quoted saying that if he could, he would buy a couple 100,000 single-family homes because he saw them as about as good of an investment as anyone could make at the time. Between 2011 and 2017, some of the world's largest private equity groups and hedge funds spent a combined $36 billion on more than 200,000 homes in ailing markets across the country. Now in 2021 and 2022, the single-family rental industry is attracting a record amount of money from institutional investors that believe the industry offers greater returns than other asset classes in commercial real estate that they would traditionally invest in, such as multifamily, aka apartment buildings. Now let's take a look at the data to see how much of an impact these professional investors are having on the real estate market and whether they are really stealing away your dream house from you. The US has roughly 140 million housing units, This includes every type of housing possible, such as mansions, tiny townhomes, and apartments of all sizes. Now, of those 140 million units, about 80 million are standalone single-family homes. Of those 80 million, about 15 million are rental properties. And of those 15 million single-family rentals, institutional investors own about 300,000 of them. Most of the rest are owned by individual landlords. So that means that institutional investors actually own less than 0.5% of all the single-family homes in the United States. Now, this data is as of mid-2021. Investors have been buying more homes as of late. I was able to find the most recent data on this topic from John Burns on LinkedIn, who owns one of the leading residential research companies in the US. And the data shows that so far in 2022, investors are buying about 33% of all homes in the country. I know that this seems like an astronomical number, that investors are buying a third of all homes. And it would make sense then that they are bidding on an even more substantial percentage of homes. But what's interesting is that large investors, being those that own over 10 homes, actually only are purchasing around 6% of homes. I still think that is quite a significant number, especially if that number continues to go up. But I also think that the picture painted from the media is very misleading. For example, articles like this one from Fox News saying that companies like BlackRock, who has a massive $10 trillion of assets under management, are killing the American dream are simply not true. In fact, the data shows that the vast majority of investor purchases are coming from small investors. So they are your mom and pop type investors that are using their savings to buy a second or third property to rent out. So that means that if investors are snatching up homes from consumers and driving up home prices, it's due to your avid Bigger Pockets podcast listener that's trying to create financial independence for themselves. But I also want to make it clear that by far the biggest reason for this house buying frenzy environment isn't because of investors. It's actually due to the housing shortage. The US is actually in need of about 1.55 million homes over the next 10 years to meet the demand for housing. This is one of the biggest reasons for the rapid rise in house prices that we've seen. However, even though large institutional investors aren't causing a major problem overall across the nation, investors are causing quite a stir in specific markets across the country. That's because these large Wall Street investors focus on investing in specific metros that tend to be more affordable in price, that also have great growth potential. They aren't buying up homes in markets such as Beverly Hills, California, where homes are all priced in the millions of dollars. And on the flip side, they also aren't buying homes in Jenks, Oklahoma, which has a population of only 25,000 people and little prospect of growing. Instead, they're choosing affordable metros that are experiencing great job and population growth. Here are the top 10 metros across the country that investors bought homes in. Now, if you live in any of these markets, as well as a dozen or so others, then yeah, you actually should be concerned about Wall Street investors. So now let's get into the moment you've all been waiting for. Who is this oh so mysterious insider that has been giving me a behind the scenes insight into the Wall Street industry? Well, ladies and gentlemen, it is in fact my husband. Although he's gonna hate that I just used a picture of him from when he was like 10 years old. So there we go, a much better picture from much more recently. Yep, my husband, funnily enough, is an acquisitions manager at one of the top buyers of single-family rentals in the country. So he's one of the guys that is analyzing hundreds of houses on a weekly basis and making investment decisions for his company. He told me that for their company's specific markets, he and his colleagues take a look at every single house that hits the market to assess whether it's a good investment or not. If the house appears to be priced well, they'll go ahead and run the numbers on it and likely place an offer on the house. So what does this mean for your average Joe looking to buy their first house and who is also living in one of these investor concentrated cities? It means that if you find a house that's on the market, so that means any of the houses you see on websites like Zillow or Realtor.com, you know, how normal people go about finding their home? Well, you can guarantee that if you stumble across a good deal, then my husband's company, as well as many other similar companies, will have already analyzed those houses to assess whether it's a good investment or not. And they would have probably placed an all-cash offer on it. This makes it extremely difficult for you to find and successfully buy a nicely priced home in this current market if you live in one of these investor-dominated cities. In fact, some cities like Atlanta, Georgia are so full of institutional investors that they own at least 1 in 5 single-family rentals in some parts of the metro area. But investors buying up these homes isn't all bad. So let's talk about some of the pros of Wall Street getting involved in buying single-family homes. One pro is that these large investors tend to buy homes that are in need of significant repairs. They buy that house on your block that has been run down for several years and completely fix it up to look great. So they are in fact improving neighborhoods by removing those houses that make the rest of the street look bad. Another pro is that they tend to provide a better tenant experience than most mom and pop landlords. Most small-time landlords are usually cash-strapped and more hesitant to fix things that need repairing, and they'll usually make the tenant put up with a lot of things that are broken and should really be fixed right away. Whereas these big-time landlords have fully fledged maintenance crews that respond to tenant requests very quickly, providing a better rental experience for the tenant. Most Wall Street investors also will usually put in about $30,000 to $50,000 into renovating a house before they rent it out, so the tenant is less likely to experience any issues in the first place. But now let's move on to some of the cons of Wall Street buying our homes. Well, there really is only one con, and that's what I've already been talking about in this video. If you happen to live in one of the dozen or two metros in the US, cities like Orlando, Florida, Atlanta, Georgia, then you will experience a lot of competition from large investors. This is likely resulting in a fair share of young buyers who are trying to buy their first home getting outbid, getting discouraged, and deciding to continue renting. And like I mentioned before, Wall Street is not causing a nationwide housing problem, but people can make the argument that with the amount of money flowing into single-family rental funds, it looks like they will continue to buy more and more homes, and the total number of homes they own could eventually be in the millions. So in a few years, this could be a bigger problem than it is today. But what's your take on this whole issue? Do you think these investors coming in are a bigger issue than I painted them out to be? Let me know down in the comments below. But that's it for me today. Thanks for watching, and I'll see you in the next one.